All right, all right, all right. What is going on, ladies and gentlemen, and beautiful people? So I took a look at the poll, and more people voted for 11 a.m. So I decided to do a surprise pop-up session right now at 11 a.m. Thursday, May 2nd. And what we're going to do is we are going to go over charting. Charting is extremely important because charting is, I believe, to be one of the most critical foundations to learn and understand and apply before you begin day trading, period. And so my goal is to keep this brief, is to keep this simple. You're going to see some QR codes here on the layout, so feel free to follow along. And before we begin, I just want to remind you that if you haven't registered for a broker, there are thousands of brokers that you could choose from when it comes to Forex, when it comes to binary options. Here's some of the ones that I use. This is not a prerequisite. This is not a mandatory thing for you to do, but I place this over here for convenience. So if you go over to mineonbillions.pro/binary FX station, okay, it's going to bring you right to this page. And we're going to use this page a lot because we can access multiple things from this one web page. So for example, if you haven't found a Forex broker yet, you should definitely consider going to swaysetup.com. So let me just put an incognito window up here. If you go over to swaysetup.com, okay, swaysetup.com, all right, this is going to bring you right over to this registration. All right, and this is for traditional Forex, okay? Traditional Forex is points-based Forex. I already went over the difference. So whether you tuned into the last live when I did the whole binary and Forex rundown, or you just went through the guides here on the Facebook group, you know the difference between points-based Forex and time-based Forex. All right, so if you go to swaysetup.com, it's going to bring you directly to this form. Okay, so you fill your first name, last name, email, number, and create your account. Click the terms and conditions, read it, of course, and register. Okay, that's one. Okay, the other one is swaypropfirm.com. swaypropfirm.com. So now just to kind of explain what is a prop firm for those of you that don't know, prop firms are basically brokers that allow you to pay to complete a challenge. If you complete the challenge, you pass the challenge, then you can earn a funded account. It's a really cool system, and this is a Forex prop firm. Okay, so swaypropfirm.com will give someone a chance who doesn't have a lot of capital to engage in a test to earn a funded account. Now, this is, I recommend for people that are kind of intermediate with Forex. If you're starting in the very beginning, then just go with swaysetup.com. But if you want to earn a funded account and you have some kind of understanding of how this works, you go to swaypropfirm.com to earn yourself a prop firm account so you could trade more money, which will allow you to leverage more money in order for you to trade faster and trade stronger. Okay, now for binary options trading, actually let me just go over here, swaypropfirm.com. All right, it's going to bring you right over to a registration form as well. All right, you can literally fill out registration forms for all this, and you don't have to put any money down right now. But you can at least take a look at everything. So register, swaysetup.com, swaypropfirm.com. Register. It's real simple, real easy. The other one is Do Trade, okay, which is a German-based broker. I believe is a German-based broker. Most people that are on it are German. So there's a European-based broker, DoTrade.com. It's a broker that allows you to trade binary options. Binary options is time-based trading, and I'll break that down in just a second so you can see in real time. Okay. Basically, you can put in a 5-minute trade, 15-minute trade, whatever. All right. When you click on sign up, okay, you just fill out the form. Okay, it's free to fill out these forms, and then it's gonna allow you to browse around the site, check it out, so on and so forth. And finally, the last one would be CoinZoom for the crypto lovers. Okay. Real simple, you can, access these right over here. Okay, so when you go over here to mineonbillions.pro/binary FX station, it's all right here. You go to CoinZoom and you just register for CoinZoom, and it's at no cost to you. So no, I'm not selling CoinZoom for 200, 300, 100. It's just free. Just go to CoinZoom, register for the crypto exchange, you'll be good to go. So with these 4 things, you'll pretty much be set for day trading, forex, binary options, and crypto. Okay. Now, as we go further down, you'll see I have a few playlists. After every time I do a lesson like this, you are most likely going to see it in the trading blueprint recorded sessions. I might make a whole new playlist, just for this new run of lessons that I'm doing. And as far as the paid add-ons, okay, we do have the harmonic AI charts. So you can literally go to harmonicscanner.ai or harmonicscanner.app, and it's going to bring you right into getting access to this extremely powerful system. All right, so go to harmonic.ai or go to harmonicscanner.ai or harmonicscanner.app, and it's going to bring you right to it. Now, for the Telegram alerts and the Discord alerts, basically I send trading alerts. I do some analysis. Me and my team, we conduct an analysis. You're going to get introduced to more people on the team. You already know one of them by the name of Mark Samaru. He's been rocking with us for quite a while. He's one of the Signal, one of our Signal guys. But you're going to meet more individuals that's been rocking with me for 10 years, more than 5 years, so on and so forth. Okay, so when we put out alerts in our system, okay, it goes to both Telegram and Discord. Discord is a little more expensive. It's $66. I don't know why. But the Telegram alerts are just $50 a month. You can pay for a year up front, $500 for a whole year up front. The harmonic scanner, the harmonic AI chart, the first level of it is $25. And you'll be good with just that. You don't need the gold version of it. The harmonic AI chart, $25 is fire, just like that. But let's say you don't want any of these, okay? That's cool. Just enjoy the free value that you're getting on these live sessions. There are tools that eventually you're going to want to get access to, especially harmonic charts and, getting signals at your convenience so you don't have to sit around and, wait during a session before you get an alert. You can actually do what you're normally doing, and boom, if you get an alert, you can just simply apply it. Okay. Now, with that said, okay, I did the quick rundown over here. Now we can begin our lessons. Eventually, we get into more advanced lessons, such as going over harmonics, candlestick patterns, market structures, more advanced stuff. Eventually, we'll hit, smart money concepts, which is another term for institutional trading. And we'll go through all of that stuff in due time. In the meantime, for the sake of the new series of videos that we're doing, I'm going to keep it simple. We are going to cover ground on basic charting, okay? There's a lot of different charting tools out there. I have access to my own charts, basically. So I'll go to Charts Plus. I have a couple of working strategies here on the drop down. Okay, right over here. And so you can use all kinds of different charting widgets, charting tools, you name it. Obviously, TradingView is what's behind the majority of the charting widgets. But this is great because, you'll have the convenience of, getting access to a few strategies. I'm going to add more of these on this. But if you get the year Telegram or the year Discord, I'll make sure you have access to this as well as like an added value, all right, that we're going to throw in for you. Okay, so before we start talking about the advanced indicators, all the different tools and all that, we're going to talk on basic charting, okay? So this is when you're literally stripping, okay? You're literally stripping all of the tools, all of the indicators off a chart, and you are starting from scratch, okay? All right, so let me go into my TradingView over here. And we're gonna keep it really basic. 45 racks up for grabs. You gotta love trading, guys. You got all kinds of competitions, and you don't even have to, put money down for them. It's just so awesome. All right, so I'm going to remove all drawings. I'm going to remove everything. We're going to strip everything down to the basics. And if you have any questions, I'll definitely answer the questions towards the end. That way we get through the lesson. But here we go, okay? So when I did the binary and Forex rundown, I covered a couple of things. What is an exchange rate? What is a pip? What is all that good stuff? So we're going to go continuing from there, and I might briefly go into what is what, just to keep it real brief or whatnot. Okay, so we are right here. This is, let's bring it all the way back. Okay, so right now we are looking at a naked Forex chart. If you like the light theme, if you like the dark theme, you could change it just by simply going into the settings and changing it from there. It's really, you could do your own thing. For the most part, though, green candles represent candles that are going up in price. Okay, so these are candles where the closing price is above where the price opened at. That's what makes that candle green. Okay, red candle, bearish candle. All right, is when price is moving down. All right, price is moving down at this point. Okay, and what you will see, all right, is you'll see what price is done within these different time intervals. Right now, I am on the weekly chart, which means that every candle we see represents what price is done in a week. If I change the chart time on it, right? And let's say I put 15-minute charts. Each price represents what price is done in a matter of 15 minutes. So why do we have different time intervals on the charts? Well, it's as simple as this. The higher the time frame on the chart, the stronger the confirmations are. It really is about the long-term game here. However, there are moves that you can take advantage in the short term. And so what we like to do is we like to analyze where the market is going long-term wise and what's happening short-term wise. So we can take advantage of longer trading-based opportunities, or we can take advantage of very short-term trading opportunities, right, when it comes to the market. Okay, and so when we go into the weekly and we zoom out, you can zoom all the way out. This will go all the way back to 1971. Okay, now peep this. Hey Siri, what was the date in which the dollar was taken off the gold standard by Richard Nixon? Okay, I got it on silence. All right, let's go to Google. Or let's go to Jump. Yeah, let's go to Google. All right, it's going to bring us directly to federalreserve.org. Gives you the whole system. All right, all the way up to 1971 when he took the dollar off of the gold standard. Okay, 1971, Richard Nixon took the dollar off the gold standard. And basically, the reason why that's significant to what we're talking about right now is because this is when Forex, as we know it today, floating exchanges, was born. So, just to put you on game, right? The dollar was the world's reserve currency. So all the currencies around the world were backed up by the dollar because the dollar was expected to be backed by gold. What ended up happening is other countries started to cash in their dollars to get their gold back. And when that happened, the United States lost nearly a great portion of their gold. So the dollar was no longer backed by gold. In other words, the United States was printing more money, right? Inflation. The United States was printing more money, and it was no longer really backed by gold. So when other countries were requesting their gold back in exchange for their dollars, it was a problem. And this is when Richard Nixon took the dollar off of the gold standard. This is something that could have caused a war. But instead, what other countries has done is they decided to follow suit, and every country basically agreed to be a part of a free-floating exchange system. No currencies backed by gold today. Maybe some currencies are somewhat backed by gold, but not really. Okay, we are so far off the gold standard, it's insane, and it's been like that since 1971. So imagine today. Now, back when the dollar was backed by gold, if you wanted to exchange one currency for another, it was done at a fixed exchange rate. At a fixed exchange rate. Now the exchange rates are changing every millisecond, basically, because, it's just the way how the market is playing out. So it's no longer fixed exchanges. It's all floating exchanges. And so anything can move the value of a currency, mostly geopolitical events, right? Geographic-based political events, announcements, decisions, etc. And so this is why it is extremely important to do your fundamentals. Fundamentals is looking at the economic calendar to see what updates are happening and how it's going to impact the market. It's very significant, right? And there are things that are happening every day, every week, every month. And it's always going to be that way. Now, when we take a bird's eye view of Euro USD, what we will see is in 1971, when the dollar was taken off the gold standard and everything became a free-floating exchange, right? You will see how the euro, okay, basically it was 53 cents USD per every 1 euro. So remember, we have the base currency and we have the quote currency. All the exchange rate prices is based on the quote currency. So over here, we could cross-reference. This was 53 cents, all right? 53 cents. This 0.53204 USD per every euro. Now, the euro didn't really come out until 1999, but this is what they were working with back then. This is the currency. This is representing the currency before the euro. All right, now check this out. Today's world, look, 2008 was the highest point. It was $1.60, all right, per every euro. This is the highest that it was. All right. Today, right now, it's $1.06 per every euro. In 2022, okay, it went as low as 95 cents USD equals 1 euro. So for a brief time, the dollar was actually valued more than the euro. I believe British pound is the one that is the most valuable. And that is because, you know, Britain has an empire throughout the world. They own a lot of different countries, a lot of different lands. In some countries, such as Jamaica is one country that I visited a couple of times. You know, they'll tell you straight up that, yeah, they have their own government, they have this, they have that. But at the end of the day, when you continue to climb up the ladder, eventually they answer to the crown to the UK crown. And there's a lot of different territories and countries that are like that. Okay, it's basically like I don't want to use certain words. I was gonna use you know, a few terms over here, but basically, let's put it like this: there are governments that is masked as if the locals are running it, but in all reality, it's you know, they're really behind the scenes. They're answering to a foreign nation. I'll just put it like that. And Britain right now is you know, is pretty up there. Okay, it's pretty up there. For example, Australia is a part of England. Is a part of Great Britain. South Africa, same thing. You know, and there's more territories. They got more territories, more so than the United States, I believe. You know, but this is what it is. You have these free floating exchange rates. Geopolitical events, you know, basically determine, you know, how the market is moving, how the market is flowing, so on and so forth. And it's always going to be that way, especially when it comes to wars. And, you know, we know what's up today. We see what's going on. You think that doesn't move markets? It is the biggest mover of markets. In a small scale, let's say we in, you know, some part of California or Chicago, for example. You go to O Block in Chicago, which is one of the most dangerous projects in all of America, Chicago, O Block. It's basically like a war zone over there. And the prices reflect that, right? There are some movers behind the scenes that actually are okay when a neighborhood is swarmed with gang activity and whatnot, because it becomes basically a war zone territory. And I learned this when I was taking real estate years ago. When a piece of land in a neighborhood is considered a war zone, is being appraised, it's going to be appraised at the lowest possible like value in reality. You know, it explains why in Baltimore, people were able to invest $1 to own a building, right? And it was an attempt to gentrify former war zones, right? So it may not be a war zone to the world standards, but if there's, quite a notable murder per capita in a certain community and whatnot, when there's a murder capital, right, within a city or even within the United States, like the top 5 murder capitals. For example, there was a point that Camden was one, New Orleans was another, especially after Katrina. It was crazy down there. Certain territories become war zone territories, and so the value goes all the way down, okay? And that will get the buyers to come in, invest in it, create a bunch of new stuff, and just gentrify the environment. So that's what happens in a small scale. In a big scale, when it comes to war between countries, between nations, between, different groups of allied nations, right? There's always going to be spoils of war. In World War One, basically we broke the entire Ottoman Empire down into multiple different countries. And the victors, the presumed victors of World War One, were able to install their own governments within these lands. And so it used to be all one country. The Ottoman Empire, you had Turkey, you had Iran, you had all these lands. All these lands, it was basically one nation, the Ottoman Empire. World War One happened. They were on the wrong side of history. They got broken up in different territories, and the victors kind of claimed their stake in these territories by occupying and whatnot. So there's always going to be movements in the markets. Geopolitical events, ladies and gentlemen, are going to be, one of the biggest ones. Okay, including trade deals and different, treaties or whatnot. It all moves the markets. So we can look back as far as 1971 when the dollar was taken off the gold standard, okay, all the way to right now. And what you will see is similar stuff. You will see trends, uptrend, okay, resistance point, downtrend, uptrend, resistance point, downtrend, so on and so forth. You're going to see it's a cycle of trends for the most part, okay? And so whenever we're doing a bird's eye view on a chart, such as this one, Euro USD, this is going to allow you to do markups that are long-term based markups, short-term based markups. So for example, we are looking back 50 years. We are looking back 53 years right now. Okay, what's this, May? What is this? May what? No, January. So yeah, we're talking 53 years. We're looking back 53 years, and we can see some similar things going on. Okay, so now let's actually identify it by marking it up. Okay, now here's what I'm gonna do to make it real simple before we start marking up. Actually, bring out my little drawing tool. Okay. All right, it should be good right there. All right. All right. So, for example, all right, what you're going to see if I can move this. Can I move this? Okay, I guess I can't really move it. All right, that's fine. All right. All right, so when we are looking at this over here, all right, to the left side, we're going to see that there are drawing tools here. Okay. One second, y'all. All right, here we go. Okay, so over here to the left, these are all drawing tools. Every single one of these drawing tools, excuse my chicken scratch. Okay, these are all drawing tools. These are not indicators, okay? Indicators you're gonna find right over here. These are indicators, and basically, all right, they are special tools using special calculations to determine different things, all right? Low points, high points, trending points, so on and so forth. So they have different usages. Drawing tools is going to allow you to visually mark some things up yourself manually, so that way you can, have a better analysis of the market. Whereas indicators, a lot of these tools are automatically calculated and will just appear on your chart. So when we're looking at these drawing tools, well, the common one is going to be the trend lines, all right, the horizontal lines, basically your lines. Okay, this is where you're gonna access your lines right over here. All right, and so there's a little arrow over here, and so when I click it, all right, you're gonna see the different options appear. So trend line, you have horizontal line. I personally like to use the horizontal ray. That's personally what I like to use. Okay, but you have your usages for different things. You can create, snapshots if you want to share some ideas. You can do that. All right, remember these are exchange rates. All right, these are exchange rates right over here. These are exchange rates right over here, and it's based off of the quote currency. All right, remember, you have the base currency, you have the quote currency. The exchange rates is going to be based on the quote currency. Now, when we're looking at this chart from a bird's eye view, we can identify some high points, some low points, and some points have some commonalities, and that is what we're looking for. We're looking for the common low points, we're looking for the common high points, and a lot of times what I like to do as well is I like to mark up points that are interesting, whether it's standalone points, okay, or points that you could see is resistance lines turning into support lines. So when we're talking about resistance lines, all right, this is resistance right over here. Resistance line right over here. This is support line. All right, so think of the support as the floor. Think of the resistance line as the ceiling. They're not absolute, but as long as there's like a common reference that this is a place where price drops, or this is a place that price rises, it's going to qualify it as a resistance or support line. Now, when we draw a line to follow some trends, so for example, if we follow this uptrend over here, we're basically following that, or this downtrend right over here, basically following that. So an uptrend line is going to connect the bottoms of the candle of the wicks on the way up. Okay, so you basically you're just continuing to connect the higher lows in an uptrend. Okay, it's an uptrend. In a downtrend, all right, you're going for the lower highs on the way down. All right, and that is basically that. Okay, so you got your resistance, your support, and your trend lines. Okay, uptrend, downtrend. Now the idea is we want to buy at the low points. We want to sell at the high points. Oops. I want to sell at the high points, buy at the low points. And if we're going to follow an uptrend, we want to buy at the low points on the way up. If we're following a downtrend, we want to sell at the high points on the way down. And that's really secondary, because the real thing is you want to get into a buy before an uptrend even begins. You want to get into a downtrend before a downtrend even begins. Right? But this is where we can find multiple different things. Okay. What I'm going to do is I'm going to show you how to actually use the drawing tools to do your SRTs. Okay, SRTs is short for support, resistance, and trend lines. Support, resistance, and trend lines. All right, this is the basics of charting, of understanding support, resistance, trend lines, basic market structure, you name it. So when we look at a spot, maybe it's not one particular point, but a whole zone, right? Where we like, okay, this is a sell zone, right? Or hey, this is a buy zone. Okay, this is what we're going to be identifying with SRTs. So let's erase all this. Let's get rid of this drawing tool over here. All right, and let's actually use these lines. So right over here, I personally like to use the horizontal ray, because if I use the horizontal line, for example, and let's say I want to mark up this low, it's going to go all the way to the left, and I may not want that. I may want to keep my chart a little more cleaner, so I'd rather just let it start at the point that I want to start and let it go right only. Okay, so let me remove that horizontal ray. I prefer that. Okay, so if I want to mark up this low over here, boom. Okay, very simple. It starts from this point and it goes right. Okay, you can adjust your lines. So this is a dotted line. I usually do that to represent a place where I bought or sold at. You could change the color of these lines. All right, and you'll be perfectly fine with that. Okay, here's a standalone low right over here. And this is just the recent moments, right? But for the sake of doing a history lesson, let's actually mark up this whole chart. Now I'm going to use a horizontal ray, and I'm going to put it at the highest thickness to represent, a very strong markup. All right, a high time frame. So I'll go over here and I'll put it at level 4 to make it really thick, so I can tell myself, hey, this is from a high time frame, or this is a super strong point. So boom, there goes a low, there goes a high. I can even go lower than that. Okay, you don't have to use lines. You can also use shapes. You can use rectangles to represent a place. So I could literally put this like this. All right, make the outline white, fill in the color white. You can do whatever you want, whatever is gonna help you understand more. Okay, now we're gonna look for some common points over here. Here's a common point over here where the market touched this once, twice, thrice, 4 times, right? Look, it did it in 1978, it did it in 1979, 1980, and August 1980, and then it dropped all the way down. Came back up, it crossed this level. It didn't actually use it as a resistance, but it did use it as support in 1988. So that was an 8-year difference. You see that? This is an interesting point over here. Then it comes down and it tests from the other side as a resistance. So this is a area of interest, because it's been acting as a resistance and as a support point in several occasions, right? But now as we fast forward, we can see that these levels were touched again in 1990, okay, 1991, all right, 1993, and we can just keep going on, right? Recently, in July 2023, it used it as a resistance again, as it once did in 1978. So when we're looking at the markets, we're going to see that the markets just tend to hit some common points, right? And so as an analyst, this is critical. So I'm looking at the highs. Sometimes I like to start high and then work my way down. Sometimes I like to start low and work my way high. But you're going to see, here's a point touch in 1992. This area was touched again. June 2014, sometime before that too. All right, so you start to see some of these common points. And when I see that there's more activity of the market dropping at these levels, that's going to qualify as more resistance for me, even if it did act as support as well. This is just typical market behavior, right? Support point. All right, several moments this acted as a support point. Here's another one. Look, see that? Here's a common area right over here. These are all super thick. So high points, low points, cool. Now let's do trend lines. Let's go back over here. Let's click on trend line. And now we can follow the trend. So again, how do you mark up an uptrend? Well, basically you're connecting the bottoms on the way up, or the higher lows. You're connecting the higher lows. Okay? How you follow a downtrend, how you mark it up. All right, you're connecting the tops on the way down, or the higher lows. Right here. The lower highs, I mean, sorry. Okay, look at this. You're going to see it's the same thing again and again and again and again and again. Okay, uptrend, hits a resistance point eventually, drops down, creates a downtrend. Downtrend hits a support point eventually, goes right back up. You're going to see the same kind of activity again and again and again and again and again and again. The market moves in cycles. Now, these are all old markups, and it doesn't have any relevance really today to do trend lines from back then because it's already over. But it's just for educational purposes that you can kind of see how the market likes to behave. All right? Downtrend until eventually hits the support point. Then eventually it's going to be an uptrend again. All right? What comes down, got to go up. What go up, got to come down. All right? You're going to see some of the same things again and again and again and again. All right? And yeah, there are times where there are trends within a trend, within a trend, within a trend. You're going to see that because you got short-term moves and you got long-term moves. Short-term and long-term. All right? You can change the level of thickness if you want, but remember, you can use this in a way that's going to help you learn a little bit better. So now we're on a weekly chart, right? Let's now bring it down to a 15-minute chart. And I'm going to move my mouse over here to the exchange rate area. I'm going to hold my mouse and I'm going to go up with it so that way we can expand it. Here we go. All right, and this is a 15-minute chart, so you can zoom in, you can zoom out, do all that good stuff. So we did some markups on the super high time frames, right? Let's do some markups on the low time frames. We can see these common areas. Support becomes resistance, resistance becomes support sometimes. You don't have to use lines. You could also use squares if you wanted to represent a zone. Like for example, this could represent a resistance zone right over here. And then we can acknowledge some other kinds of movements. Like look at this slight uptrend over here. You can adjust as you need it. Ain't nothing perfect, right? Expand a little bit more. All right. So just by looking at this on a 15-minute scale, I can already see that, hey, looks like the market is going to come up to this point, adjust as you need. It's going to come up to this point and probably drop right over here, right at this point. So then I might mark that as a red to represent, hey, look, this might drop. I could also use icon tools, which are emojis, right? And I could be like, okay, right over here, be on the lookout for the sell, right? And so I would be anticipating a sell right on this zone, which is right around here. And nothing is going to be perfect. So it's not going to be that exact exchange rate price, but maybe I could represent this as an area, okay? So if the market is within my sell zone, okay, then I'll be willing to take a calculated risk as a sell. If the market is in my buy zone, then I might be willing to take that calculated risk. Okay? And so literally with just basic charting, with SRTs, you can identify opportunities. So now what can we do if we're gonna go into a trade, right? Well, we'll have to determine what is going to be our stop loss and take profit if you're doing Forex. So this is how we can do it. You have these tools right over here. Long position, remember long is another word for buy. So there's a buy position tool, there's a sell position tool. Short is another word for sell. So in this case, if we're anticipating a sell, we're going to go with a short position tool. And we're going to say, hey, you know what? When the market comes right over here, right around to this point, let's do 1.07110, okay? This is what I'm willing to do. I am willing to risk, remember, the Euro USD, the fourth digit to the right decimal is a pip, right? This is already a 10 pip risk. If I'm willing to risk 20 pips, let's go over here to 20 pips, right? So 0.0020, that's 20 pips. Right, fourth digit to the right decimal is a pip on most pairs. JPY pairs, the second digit to the right decimal is a pip. So keep that in mind. All right, so always refer to the binary Forex rundown video that I did. The more familiar you get with that, the better. All right, now, once you set your risk, so in this case, I'm willing to risk 20 pips if the market gets to my sell zone level. What is going to be my reward? Well, there's two things you could do. Either one, you can make your reward, your take profit, 20 pips as well. And so this would be considered a 1-to-1 risk reward ratio, right over here. The risk reward ratio is 1-to-1, right? So you either lose 20 pips or you gain 20 pips. What you can do as well is that you could extend the take profit beyond that. So we can make it 40 pips. And now the risk reward ratio is 2-to-1, right? So if the trade goes in my favor, I can make 40 pips, okay? Which is $400 on a standard lot. Or $4,000 on 10 standards, okay? Or just, keep it a 1-to-1 ratio. I like to do 2-to-1 ratios. So when I see this, I'm like, okay, bet. I'm looking at this, and I can see the exchange rate over here. This would be my take profit. I can see the exchange rate over here. This will be my stop loss. And so this is when I start writing out the signal. So for the purposes of this lesson, let's keep it real basic, let's keep it real simple. Let me actually write this down because typing it out would take me too long. Okay, so let's do it like this, right? So stop loss. Ooh, I don't like that. Hold on, it's too thick. Okay. So stop loss is going to be right here because I can see it. 1.07310. Okay? All right, we see that right here. My take profit, I can see it right over here. Okay? My take profit is going to be 1.06710. Okay? And this is going to be my entry zone right over here. This is going to be my sell entry zone. All right? 1.07110. Let's just use that one as a reference point. So now that I know this, okay, what am I going to do? All right, very simple. I'm going to go, me, myself, Nes Vquez, I'm going to go right over here. Where I submit my trade ideas. And I'm going to cross-reference it. Okay? We're going to go right here. All right? Stop loss. All right, look, Euro USD. Let's follow through with it, right? This is going to be for binary and Forex. I'm going to go over to sell, Euro USD. All right, sell entry. Let's go back to it. Sell entry is 1.07110. Stop loss. Stop loss is going to be 1.07310. And take profit 1.06710. Okay, and as I look at this for binary options, I'm basing it on a 15-minute chart. I can keep it a 15-minute position or a 45-minute position. If I'm going to go with the 3-candle rule, we could go 45 minutes, but you know, to keep it easy for people, let's just make it 15 minutes, okay? So anywhere between 15 to 45 minutes, because my rule is the 3-candle rule personally. All right, let's do 15 minutes. Link to visual, I can share snapshot, copy the link to it. Go in here, copy paste. All right, and boom. All right, with this signal goes into Discord. So let me just show you. Okay, I got the form right over here. Oh. All right, so in a few, it'll hit the Discord, and then after, it's going to hit the Telegram. So I already got the message. So you should see it reflect on Telegram and Discord. 1 second. Yeah, today at 12:05 p.m. You see it's on Discord, and then it is going to go right into Telegram in like 60 seconds after. Okay, and so this is really behind the scenes of what I do whenever I'm sending a signal. I go through my own form that I created, and I send it to Discord, and it goes simultaneous to multiple sources, and it eventually hits Telegram. Okay, so now that we understand this, we're like, okay, well, this is not that hard if you're just using SRTs, support, resistance, and trend lines. But now that you have the trade signal, all right, Nes, how do you actually apply it? Well, there's different things that you can do. All right, you could use the MetaTrader app on your mobile device, like I showed you in the first video, where you just simply enter the stop loss, the entry, take profit, enter your position. You could do it through the web version of MetaTrader. Say I go in here and we go over to MetaTrader right over here. I have a couple of things running on this specific MetaTrader program. I got a couple of bots running on it. So usually when I open it, it's gonna take some bandwidth, but yeah, we're gonna see that play out. Let me erase this, and let's see. Yeah, MetaTrader 5 is popping up. Okay, I run bots on this one. This one I only use for bots. I like to trade on sway charts, which is good for swayprofirm.com and swaysetup.com. But as you see, I have a couple of things around this, and this is some fly stuff. This is some real cool stuff here. But if I wanted to place a trade on this, then I would just go over here to new order. Later, I will go over here to new order if I'm using the web app. Okay, and this is how you would manually put it in. You'll just copy and paste whatever you see on the Discord. So for example, let me just show you live demonstration. All right, this is the setup that we have right now. Okay, check this out. All right, so we know it's Euro USD. So let's go in here. We're going with Euro USD. Boom. All right, Euro USD. We could do instant execution, which is market execution, means the same thing. So instead of me putting an entry price, it's just gonna start where it's at. Volume is the lot size. So let's just say we go with a standard lot, and this is just a demonstration account over here because I run bots on this one. So you could type it in, you could use the arrows on it, however you want to do it. Okay. All right, a full lot. Okay. Stop loss, you can enter it right here. So when we go over to Discord or Telegram, because it goes on both. All right, let's put the stop loss right over here. Copy and paste. That's it. Look, check this out. Copy and paste. That's it. Watch this. Watch this. Like I said, Discord and Telegram, we good to go. So we got the stop loss on Discord. It's literally the same signal. All right, so let's go over to Telegram for the take profit. You see, it's the same signal, guys. Same signal, nothing different. All right. Deviation, no deviation. I'm going to enter a sell. Oh, what is this? Oh, I see. Okay. So in this case, it can't be market execution. This thing already dropped? What? Hold on. Okay, I see. Yeah, it's out of the sell zone. But take profit, stop loss. Make sure I got this right. 1.06 for the 1.06710 for the take profit. Wow. 1.06710. 1.06 710. There we go. All right, cool. So this is just one example, and then you will see an order right over here. Here's $1 in profit, $2 in profit, whatever, right? And like I said, I got a couple of things running that I can't wait to introduce to y'all later. But look, I already got a signal over here, and if I wanted to, I could literally copy this whole thing and just paste it right over to you guys. That was AUD USD. Right over here. But I know it's probably a different time frame or whatnot. But yeah, I have all kinds of things running on here. All right, as you can see, my algorithm is running. And so when I have some new releases for y'all gonna see this automatically be put in the feed. But yeah, this is some real cool stuff. Look, $8 of profit, $5 of profit, blase blah. This is just a quick example. There you go. Simple stuff. All right, let me X this out. Okay, and here we go. All right, so this is how we use the short position tool to determine stop loss, take profit for a sell. If I wanted to enter a buy, then I would use the long position tool, right? Where this would be my point where I would be interested in buying. And I do the risk first. So let's do a 25 pip risk for a 50 pip gain. Let me pinch the exchange rates a little bit just so I can see more of the chart. Let's do that again. Okay, and boom. Right? So same concept. You'll see where the take profit is. You'll see what the stop loss is, and you know where your entry is. This is how you use short position tools and long position tools. Now, I wasn't going to get into using particular tools other than the basic SRTs, but I feel like, you know, it's important, especially if you're learning to trade, that you at least get this in the second video. For those that are using Sway Chart, right, whether it's for swayprofirm.com or swaysetup.com, let me show you how this works. Okay, so we're gonna go over to swaycharts.io. So api.swaycharts.io. You'll get your account credentials with this if you either enter swayprofirm.com or you go through swaysetup.com for regular Forex. All right, so I'm gonna get up in here. Okay. And so this is a web terminal. Most US brokers are getting out of MetaTrader And so some US brokers have their own web trading terminal, and this is Sway Charts. So again, if you have swayprofitfirm.com, or if you went through swaysetup.com for the regular Forex broker, you'll be good to go on that. But yeah, basically similar concept. If you want to get involved in a trade, you could do so. Just make sure you put in whatever it is that you're interested in trading. For example, USD/JPY. Let's say I wanted to trade this, right? I would click any of the order buttons over here. This is the lot sizes. Let's say I went with a standard lot, and I decided that I want to take a sell. All right, with protection orders. I could put the stop loss here, the take profit here, and I could just literally execute my order. And then if I ever want to cancel a trade for whatever reason, I could literally see the positions that are open, and I can exit out and close the position, whether it's in loss or profit. Why would you want to close the position in loss? Just in case if the market is going to continue to go in a direction you don't want it to go. But I'm going to carry this trade until it is in profits. All right, I'm on AUD USD right now. Okay, and so different platforms is still going to have some of the same elements when it comes to trading Forex. You get to choose the actual symbol you want to trade, or the trading asset you want to trade, currency pair, whatever it is, cryptocurrency, whatever it is. You're going to have your opportunity to do market or instant execution, means the same thing, or to actually put in your entry point, stop loss, take profit. You're going to have all those elements there. Now, when it comes to a binary trade, this is time-based trading, okay? Okay, we'll go to do trade right over here. All right, when it comes to time-based trading, let's say I want to enter a quick 1 minute trade and I'm interested in taking a sell. All right, then I would just click on down, because down means sell. Remember the synonyms we were going through on video 1, all right, last session. Okay, let's say I wanted to quickly go for a quick sell. All right, you see the arrow down over here. If I'm correct with my direction prediction, then I clear it. If not, then you don't clear it. All right, it's one of those things. So whether it's a sell or a buy or whatever the case may be, as long as you correctly predict the direction, all right, then you'll be good to go. Say if I enter a buy at the same time, all right, I haven't done any analysis on USD/JPY, but it's just to show you that this is the style of trading where it's time-based. You put in the time limit, you put in how much you want to risk, enter buy or enter sell, whatever the case may be, and you'll be good to go. All right, I don't need to see that. I know how that's gonna end up. But very simple. So again, let me use my little drawing tool thing. All right, you're gonna have similar elements. All right, you're gonna have similar elements where it's like, okay, here's the time that I could choose for my trade. All right, you see the countdown right over here. I could choose anything between 1 minute to 60 minutes. I could even choose days, even choose months that I want a trade to expire. You'll know exactly what you're trading and the payout that it's offering. So whatever it is that you're risking, if you win the trade, all right, you make that risk back plus 63% net profit in this example, and this is the total potential payout. This includes your risk. Here is your buy and here is your sell right over here, okay? So this buy and sell. All right. And it's basically as straight up as that. You're either going to win or you're going to lose. Okay. And the trick is, as long as you have more wins than losses, you'll be all right. But even better than that, the bigger trick is your risk management. Your risk management is really, really important. All in all, trading involves risk, including some of all of your initial investment. And past performance never guarantees future results. So it's important to understand some of these things over here. All right, you're gonna win some, you're gonna lose some. It is what it is. All right, here's a couple of my most recent winnings. Do I trade all the time, every day, 24/7? No, I don't. But you know, when I'm in the mood, I just hop on, take a quick trade, call it a day. That's it. Keep your risks, manageable, and you'll be okay in the long run, right? So yeah, this is the live binary options chart that I use. Okay. And so you have your points-based trading with the sway system. You have your time-based trading with Do Trade. When it comes to CoinZoom, it's just a crypto exchange that you can use. But yeah, there is a lot of thought that goes into all this, right? To get access to the signals on Telegram, just go to t.me/MOB access bot. Right? When you get into the access bot, all right, it's gonna prompt you for your plans and status. When you click on plans, you're gonna see there's the monthly plan and there is the annual plan. So to get access to the signals is only $50 a month. My whole philosophy is, there's no way you can make less. There's no way you're gonna make less than $50 messing around with us. For years, only $500 for a whole year. There's companies where it's $500 for you to get started in the first month, right? And so we're not doing that. We're not beating people over the head. We don't need to create a business model that only cares about subscribers more so than what the learners are learning. And this is why, like, this part is for the most part, these live streams are free. It's for the community. Okay, I believe the education is critical, and if you like the education, you appreciate the education, and you like, hey, you know what? There is a lot to learn, a lot to look at. I think I'd rather just sit back, relax, get these signals, and apply them. You can do that because it's more of a time saver. But we're going to cover all ground over here. We're going to cover the students that actually do want to learn. They want to jump on the live streams. We're going to cover the students that want the total done for you service, which we got. Okay, we have that. All right. Let's go back to Binary FX Station, and we're going to bring this in for a close. Okay. When you get up in here, there's QR codes that you should be seeing on the layout of the live, so feel free to use that. It'll help you get through places. Free registration, free registration, free registration, free registration. Just register for all of them and take a look at some of the videos and stuff they got on it. Take a look at the features they have, whatever, right? Free video playlist, free video playlist. Take advantage of these two. These are for my OGs that were Binary FX members, and they also have access to the strategy charts that I show them. They actually, they pay for that. So, but what I'm very excited about is the Harmonic AI system. So you go to harmonicscanner.ai. It's going to bring you right to the Harmonic Scanner system. You're going to see all this. It's going to identify, look at this cell zone. Look at this drop. This thing drops so heavy. Look at this. Oh my gosh, this is incredible. It's beautiful. You're going to get advanced to this, super advanced system. So just go over to harmonicscanner.ai. All right, harmonicscanner.ai. All right, ladies and gents, and that's $25. So you can have the signals for $50, the harmonic scanner for $25. That's $75. If you don't want the signals, but you want the harmonic scanner, that's $25. If you want the signals, no harmonic scanner, that's $50. You can literally do whatever you want basically. If you don't want to buy anything, you just want to enjoy the value on the Facebook group or whatever, feel free to do so. Just understand that anybody who does get access to the signals and things like that, you know, they're obviously going to be included with exclusive stuff that we put together. So just keep that in mind. The 1 year membership, $500. Get out the way. You know, you'll be covered for a whole year, and that's for the signals. Okay, that's for the signals. And so with that said, I covered a lot of ground over here, guys. Be on the lookout because we're only going to keep them coming. I'm gonna drop this as the second video that you should reference on the guides. Where can you find the guides? Very simple. All right, let's go to the home right over here. Okay, we are going to go to minor billions. I don't know what all that is, but click right over here on guides, and you're going to be able to find this video on guide number 4 once I create it. Okay, and so a lot of times on my lives I simulcast it. So I have some individuals that are watching this through Zoom. I have some individuals that are watching this through other means, YouTube, for example, and even people on the Facebook Live itself, on the Facebook group itself. So yeah, this is simulcasted. And with that said, ladies and gentlemen, I hope this video was valuable. I hope you learned a lot from this. With that said, stay blessed, take care. I'm out.